Gary, for thing number four, we've seen quite a bit of talk on X and the finance community, talking about the risk in Japanese government bonds, the carry trade. Thing number four, a little bit of a victory lap, I'd say here,
Yeah.
for better or worse, right? DKI called Japan's disaster in 2022. FinTwit now agrees. Thing number four.
Yeah, so this is something that we've been seeing a lot of on FinTwit now. Everybody's now an expert on the carry trade, and they're all making the call. Fortunately, DKI was talking about this as early as October of 2022. So, 23 months ago. And we were out in public on it. Fortunately, there's video, there are time and date stamped videos, podcasts, a lot of writing. But basically, what happened was for years, uh, the U.S. Treasury bonds were yielding a much higher rate than Japanese bonds, which actually were yielding a negative rate forever. The Bank of Japan they were even more crazy than the U.S. Federal Reserve. Our Federal Reserve kept our interest rates close to zero, but didn't control the 10-year as much. And so, we saw a lot of like 3% and 4%, 2, 3, 4% on the 10-year, where in Japan, they had negative rates and kept their 10-year below 1% forever. And so when that happened, we saw a lot of carry trade. And what that was people were um, shorting the yen and shorting Japanese government bonds and at a very low rate or even a negative rate. And then they were using that money to buy the US dollar and to buy US treasuries. And that was called the carry trade. And as long as you didn't get too big a shift between the two currencies, it was kind of this risk-free um, transaction. And there were trillions, maybe even tens of trillions of dollars devoted to this. Well, the problem with that is, now the US Federal Reserve is going to be lowering rates. Japan is increasing rates. They're trapped. No matter what they do, they're kind of screwed. And the reason for that is because um, if the Bank of Japan keeps rates low, then they're going to have massive inflation. And the way you see that is the value of the Japanese currency has just plummeted against the dollar. Recently, it's come back a bit because Japan's gotten up off of zero. That's their version of the Fed funds rate, their reference rate. But with that said, um, part of the issue is Japan's debt to GDP is over 260%. So as they increase rates, it's going to create a massive deficit. And the only way they're going to be able to pay for that is to then print more yen, which leads to more inflation. No matter what they do, they're kind of stuck. If people remember from last month when the Bank of Japan, increased that reference rate, their version of the Fed funds rate, we saw the yen strengthen. And because the carry trade started to unwind, it caused a massive drop in the US stock market. We saw the S&P 500 and the NASDAQ in particular plummeting as a result of that. These were all things that DKI was talking about 2 years ago or 23 months ago. So we're glad to see that the FinTwit community is catching up, and we welcome people to this realization. And I'm not being sarcastic about that. It's important. This is a big deal. There's a lot of risk in the market. We're talking about tens of trillions of dollars lined up to move in the other direction when the US Federal Reserve starts to cut rates, and the Bank of Japan is talking openly about the need to raise rates again. So, should that happen and that carry trade starts to unwind, there's a lot of risk in both the stock and the bond market here. I think it's great that more people are starting to pay attention to that.
Yeah, Gary, you had it pegged. It was October 27th, 2022, calling it a death spiral. This is not going well if you're the Bank of Japan. So great job to you for being early and right on this, number one. Number two, anybody else that you'd like to call out that was on point with this call and seeing what you saw in the Bank of Japan?
Yeah, there were two other people who I think were early and right on the Bank of Japan and the carry trade. One was Micheal Gayed from the Lead Lag Report and Title Financial. Michael was kind enough to host me on his show. It was a Twitter space at the time, and that interview is still up here on YouTube, and it still exists on Twitter, now X. But this is something that Michael was also early on and something that he's been covering in great depth and a lot of detail this year. So, thank you to Michael and congratulations to him for being right on this. Also, big round of applause to Mark Rossano. He and I got together. We spoke at the New York Alternative Investment Roundtable. I think it was in November of 22. Mark also understood what was happening very early. The two of us had, I think, an hour and 15-minute conversation focused on this. And, Mark's a really smart guy, like Michael. And I think the two of them, round of applause for being early and right on this one as well.
Thing number 5, Gary, we're going to move to Nike. Stock has performed poorly for years, declining sales. Our friends over at Learn Wall Street, who I think you're going to talk about here in a little bit,